Hello and welcome to this week's crypto update. So what's been happening in the markets and what does it mean for Bitcoin and the rest of the cryptocurrencies? So let's start with Bitcoin and see what's happening with it, and we take it from there. Bitcoin, the sovereign wealth is diving in. When sovereign wealth funds move, they move the whole market. This is according to Anthony Scaramucci. They are already on the edge of the pool, just waiting for the green light. So who's he? He is the founder of Skybridge Capital. They manage billions. He's deep ties to institutionals and sovereign wealth funds, and he's one of the most connected voices in traditional finance. So he knows what he's talking about in this space. But important point is that this only hits once US legislation gives the green light. And what that means is stablecoin regulation, guidance for banks to custody Bitcoin, and rules for tokenizing real-world assets. So on the stable coin regulation, that's expected to be voted on with the Genius Act very shortly, and most people are very positive and expect it will actually pass. So that would be one of these items that would need to happen. On the other two, there's significant movement in this direction, and it is seen now that it will only be a matter of time before they come to. And of course, what happens then? Well, as he has said, they'll be buying $500 million to $1 billion in Bitcoin at a time. As again, quote from Anthony Scaramucci, why does this matter? This is big money. It's not retail, it's not traders, it's the deepest pool of capital on earth. If sovereign wealth funds decide to just allocate 1 to 3% of their portfolios to Bitcoin, what will that mean? We're not talking about Bitcoin going to 1 million as being a moonshot. We're talking about being the base case, which of course is about a 10x from here. The infrastructure is being built, the capital is waiting. The moment proper regulation hits, the floodgates open. So what's being said here, quite simply, is the biggest money in the world, institutions, sovereign wealth funds, when they come to the party, they move markets. As simple as that. And for that to happen, there's a few pieces of regulation need to fall into place. And when that happens, big money comes. Bitcoin's going to move in a huge way. Certainly, I believe this will happen. And I think going to 1 million, as it says, is base case. Where does it go from there? Well, have we had any signals that these guys can move markets or that something can happen when big money comes in? Because we've already seen ETFs, we've seen significant movement come into those. As an example, the fastest ETF ever to go from 0 to 70 billion is gold ETF, GLD. And it did that in 1,691 days, so just shy of 1,700 days. Well, the IBIT ETF, which is the Bitcoin ETF, has done that very same thing, 0 to 70 billion, in 1/5 of the time. In other words, 5 times faster, as you can see in this chart. So in just 341 days. So we've already seen how quickly things can move when big money comes to the table. And we're seeing that right now. Bitcoin is moving off the back of institutional investors, not retail. Retail is still on the sidelines. So is most of the big money from institutional investors and sovereign wealth funds. So we can see where this is moving. So another prediction, Bitcoin to infinity. What could that possibly mean? Well, Tim Draper just doubled down. Who's Tim Draper? Tim Draper is a guy who bought 30,000 Bitcoin off US Marshals when they had taken it from Silk Road. He bought this back in 2014. Tim Draper's the guy back then was on various financial channels explaining why he thought that Bitcoin would go 5,000, 10,000, 20,000 and beyond. This was when Bitcoin was just hundreds. He was being laughed at on live TV as to why he would think or even suggest this. This is the same guy now who is saying that not only is he saying, 250 grand by the end of the year, not only is he saying 1 million target, he's calling for Bitcoin to go to infinity. How could that happen? Because in his view, in 10 years, the dollar won't exist. In other words, Bitcoin won't be priced in dollars because dollars won't exist. Bitcoin will be the unit in which everything else will be measured. For the moment, of course, that's the dollar. So interesting thoughts around Bitcoin. So what about Ethereum? Well, Ethereum, according to Glassnode, just 16.5 million Ethereum remain on exchanges. That's only 13.65% of the total circulating supply. And in the past 90 days alone, 1.4 million Ethereum, so nearly 1/10 of what's remaining, has come off exchanges, which current value is about 3.87 billion, has been pulled off exchanges. And it's seen that when people are pulling these things off exchanges, that it's a sure sign that they have no plans on selling anytime soon. In other words, long-term holders are growing. We haven't seen exchange balances this low since 2016, nearly 9 years ago. Other Ethereum news: spot ETF inflows. Ethereum ETFs have pulled in 803 million over the last 12 trading days. This is compared to Bitcoin that did 752, so less than that. Normally, Ethereum's inflows are, around the 10th of what Bitcoin are. You can imagine institutions have moved towards Bitcoin first, and obviously there's a much bigger market cap of Bitcoin. But in this one, the last 12 days, it's been more Ethereum. On top of that, staking all-time highs. So there's 34.8 million Ethereum is now staked to the network. That's just under 29% of total supply, which is, again, a new all-time high. On top of that, we've got derivatives volume. There's 24-hour Ethereum derivative volumes hit 110 billion earlier this week, which marks a 38% increase and is higher than Bitcoin's 84.7 billion in derivative volume. So again, huge signs that there's big momentum moving towards Ethereum. DeFi TVL, so total value locked. So in other words, this is the amount of money that's locked within the DeFi space in general. And Ethereum has added 16 billion to its DeFi total value lock since May. And the network's total value lock dominance has increased from 50% to 55% over the same period of time. What's all this mean? Basically, we have been talking about Ethereum for many months now when the narrative was completely gone against it. We were saying it still has the majority of developers. It still is the king of DeFi in general terms. It is still the king when it comes to smart contracts. When everyone else was talking about Sui and Solana and their great projects, we were saying that Ethereum was very well positioned. And in fact, when it went below $1,500, we were saying this is a great time to buy Ethereum. It nearly doubled since we mentioned it. So Ethereum is doing extraordinarily well and is going to be a big project moving into the future. On top of that, we see the price chart. Since May, Ethereum's price has tended to hold strong in the face of Bitcoin's dip. So Bitcoin's having a dip every so often, and it's having one right now. Ethereum is right now breaking and holding above the 2,500 resistant channel, and trading volumes are elevated. So again, a lot of interest in Ethereum. Can Ethereum pull back? If Bitcoin has the pullback that I think it may have, then Ethereum might offer big value once more. So CPI. So the overall CPI print for May could be considered good. So this is the health of the, it's the numbers for inflation. And of course, if inflation is coming down, that seems to be a good thing for risk on assets like Bitcoin and crypto in general. Of course, if it's going up, the opposite applies. The headline CPI rose by 0.1% over the month and 2.4% annually. This was below expectations of 2.5%. So the media have put this out and said, oh, it's amazing. The interest rates have come in under expectations by 0.1%. But it's also risen by 0.1% since last month. So it's amazing how they can change the narrative on how they report this. But what they're reporting right now is we've had 4 months of the CPI reducing based on expectations. And so the CPI numbers are in. It came in below expectations at 2.4, but still ticked up from the last month's data of 2.3. So on CPI and in general, there's huge calls now by President Trump and by many in business and banking that the Fed and Jerome Powell should reduce interest rates now. Why would you reduce interest rates? Well, if you reduce interest rates, it makes borrowing money cheaper. which would be good for people with mortgages, car loan payments, credit card payments, and business in general. And of course, the government themselves, who need to roll over between 7 and 9 trillion in debt. And of course, the lower the interest rates, the better and the less that will cost. In what scenario would you do that? Well, if jobs markets was showing weakness and interest rates were reducing, then that's the opportunity for the Fed to reduce interest rates to try and help with the job market. And, you know, they can do that when interest rates are coming in the direction they want them to, or inflation, sorry. But at the moment, the jobs market is being reported as being strong and that inflation is sticky. And of course, it hasn't come down to its 2% mark that it is aiming for. But this is reducing, jobs market is showing weakness. In order to help that, you would think that you should reduce those interest rates. Trump is calling for 100 basis points reduction in the next meeting, which is next week. It's expected there will be zero. It will not change. Why is this? Well, the Fed fear inflation going back up if they were to reduce interest rates. And at the same time, they believe that tariffs are going to have effect on increasing inflation as well. They don't want to go in ahead of that. But on the other side, and I think where the mistake is being made and going to be made, is the job market is not as strong as they are reported. Again, the last 2 job market reports they gave in the previous 2 months have been revised down. And this happens. They report the jobs market and then quietly later they're revised down. And they were revised down by 100,000 jobs. And this month, they've reported 139,000 new jobs. And by the way, most of that will get swallowed up by the inaccuracy of the previous one. And on top of that, it's highly likely to get revised down too. So in essence, there's real signs that the US economy is not in a good place. The jobs market is not in a good place. And in that scenario, there should be reducing interest rates. But because they're afraid of inflation being sticky, or worse, start going back up if they were to do that, plus add in potential tariff pressure upwards on that, they are holding tough. This, I believe, is going to be a mistake. We can already see here, there are far more sellers than buyers in the US housing market. But it's not just how much different it is, and there's about 500,000 more sellers than buyers. It's the rate at which sellers are increasing. You can see it in the chart here. It's increasing dramatically. Add into the fact that we have more credit card delinquency, car loan delinquency, student loan delinquency, and mortgage payment delinquency happening right now. That is a huge indicator that the consumer is suffering big time. When the consumer suffers, they stop spending. It's a massive part of the overall economy. I think we're going to see some negative figures coming forward before too long. JP Morgan, Jamie Dimon from JP Morgan warns the US economy could soon deteriorate. And on top of that, we have a warning from a top investor. So legendary billionaire investor Paul Tudor Jones, major investor, massive respect in the area. His advice for investors: it would be some combination of Bitcoin, gold, and stocks. That's probably the best portfolio to fight inflation. And so there you have it. There's a lot going on in the market. Hugely positive stuff happening with Bitcoin and Ethereum. Will that move into an altcoin season? What happens next, and where's the economy going? I'll cover all that on the private video for members. With that, hope you found that useful, and we'll talk to you all very soon.